So hello, what's up? How's everyone doing? Welcome everyone to this revision session where we are going to revise essay 810. Sir, essay 810 talks about what? It talks about the engagement to report on summary financial statement. So in this revision, we are not only going to revise the concepts but also the questions. Also the questions which are related to essay 810. So are you all ready? Yes sir, we are ready. Make sure you mark your attendance on this video by liking this video so that it reaches out to more students who want revision videos in English. Got it or not? Yes, sir. Let's begin with the revision. So before we begin, how to audit, we need to understand what do we mean by summary financial statements. So we are going to refer these board notes. These are available on the Telegram channel. Again, that channel you can join by the link in the description. So it says summary financial statements, again, like normal financial statement, they also reflect historical financial information like profit and loss for the year ended, balance sheet as on the date. So they reflect the historical financial information which is derived from the main financial statement. Got it, sir? But because it is a summary, it will always have less details than the financial statement. But don't worry, it will be a proper structured representation of the economic resources, that is the assets, obligations, that is the liabilities, these resources and obligations at a point in time, that means summary balance sheet, or changes over a period of time, that means summary P&L. So only thing that you need to understand in the definition is that these are the summary financial statements. So being a historical financial information, they are derived from the main financial statement only. Because it is a summary, it has less details, but don't worry, it is a structured representation of the balance sheet and P&L. Balance sheet means economic resources and obligations at a point in time, and economic resources and obligations, whatever are the changes over a period of time, that is the P&L. Now, sir, understand one thing. You will accept such engagement only when you are auditing the whole financial statement from which summary financial statements are derived. Now, like before essays, we have divided this essay also in three portions. What are the three portions? Engagement acceptance, engagement performance, and reporting. Sir, as I told you, you will accept this engagement only if you are auditing the financial statements as per standards. That means the financial statements from which summary has been drawn, you are auditing those financial statements. Got it, sir? The second thing is, always, what did I say? Applicable FRF should be acceptable. Here we will not use the word FRF. Here we will use the word applied criteria. Say with me, applied criteria. The applied criteria should be acceptable. Now, sir, again, as I have discussed in the previous standards, this can be established by a standard setting organization or the law regulation. And in this case, whatever criteria is available, auditor, if he wants, he may, it is an optional thing, he may presume it to be acceptable. He may presume it to be acceptable. Now, sir, for this acceptability, what are the factors he need to consider? These factors are very much similar to the one we used to discuss for acceptability of applicable FRF. First of all, nature of the entity, whether it is a profit-making entity or a not-for-profit-making entity. Then you need to consider the purpose of the financial statement, whether it is a general purpose financial statement or a special purpose financial statement. So these 2 points are similar. Say with me, nature of the entity and purpose of the financial statement. And this purpose of financial statement is to do what? So satisfy the users. You need to satisfy the users. That means you need to fulfill the information needs of the intended users of summary financial statement. And in the last point, just get alert. Sir, alert means because it is a summary, because it will have less information, make sure that it is not misleading. Make sure that it is not misleading. Ensure that the summary financial statements are not misleading. So these are the 4 points you will consider: nature and purpose, nature of the entity, purpose of the financial statement. What is the purpose? Satisfy the users. How to satisfy? Providing proper information. So the information needs of the intended users of summary financial statement. And last, may ensure that the summary financial statements are not misleading. That means you are providing them full information so that these are not misleading. So be alert. Got it? Got it, sir. Now, sir, talking about the management responsibility, again, this point is very much similar to the one we cover in essay 210. In essay 210, I told you that every time you are accepting an audit engagement, you need to enter into an agreement with the management. Agreement where the management not only acknowledges but also understands the responsibility. There we covered 3 points. So what were the 3 points? PPFS as per applicable FRF. That means the preparation and presentation of financial statement as per applicable FRF. Since these financial statements should not have material misstatement, then the management have to design the controls so that they are free from material misstatement. And then when the auditor comes, provide the auditor with AU. What was AU? All information, additional information, unrestricted access within the entity. Here also the points are similar. Everyone, let's revise the points. First of all, it says preparation of financial statement only, but it is summary financial statement, not as per applicable FRF, but as per applied criteria. That is what I told you. Yes or no? Yes, sir. The second thing here is a little different. So it says making the audited financial statement from which you have drawn the summary available to the intended users of summary financial statements without any undue difficulty. Sir, how is that possible? Let's understand. It says you need to describe from whom and from where the audited financial statements will be available. So these can be available on public record. Oh, or management can establish a process via which the intended users can access the audited financial statement. So if you want that management makes the audited financial statements available to the intended users of summary financial statements without undue difficulty, these are the factors you will see. Management needs to tell from whom and where these audited financial statements are available, either on public record or you develop a process for that. Are the 2 points clear? Yes, sir. And last mate says whenever there is a summary financial statement in any document, along with that the audit report will also be included. So please understand this with me. If there is any document in which there is a summary financial statement, so audit report will also be attached to it. Audit report will also be attached to it. So if in any document summary financial statements are going, along with that audit report will also be provided to it. So include the audit report on summary financial statement in any document which contains the summary financial statement and state that the auditor has reported to them. So three things: preparation of financial statement, providing the audited financial statements without undue difficulty, and the third point is summary financial statement will go alone. No, sir. Audit report will also be with them. Audit report will also be with them. Got it, sir. So these are the basic points that I just discussed with you. Let's revise them from the book. So first of all, what do summary financial statement reflect? This definition we have already covered. Engagement acceptance, I already told you. In this, you just need to focus here on this part, sir. What? It says applied criteria should be acceptable. Applied criteria means the criteria applied by the management. Criteria applied by the management in preparation of summary financial statement. It says management is the one who is responsible for determining the information. What information will be reflected in summary financial statement? Got it, sir. Because summary financial statements come aggregated information. Aggregated means all the information is summed up. Okay, and there is a limited disclosure, so there is always a risk of misleading. Okay, sir. And this risk of being misleading increases when the criteria does not exist. When the criteria does not exist, so this part you can just give a read. That's the basic things. Factors wala thing we have already covered. Let's revise again. Revision in revision. First of all, nature of the entity, purpose of the financial statement. What is the purpose? Satisfy the users, fulfilling the information needs of the users. Make sure it is full information so that it is not misleading. Easy peasy, easy, sir. Then this you can take a presumption that whatever criteria is provided by the organization law regulation, you can presume it to be acceptable. Got it, sir. If it is unacceptable, don't accept the engagement. Sir, law says you have to accept, then you are not complying with the standard. Got it? Got it, sir. Last, may just remember one thing, that whenever summary financial statements are there, they should disclose the summarized nature. So it should be like summary balance sheet, summary P&L. Got it? And write it, they are prepared from the audited financial statement. Again, basic things, you can just read them. Now, sir, you need to obtain an agreement from the management that it acknowledges and understands the responsibility. First responsibility, prepare the summary financial statement. Second responsibility, make the audited financial statements available to the intended users without undue difficulty. Sir, how to know there is no undue difficulty? Simple. Clearly describe from whom and where these are available. Got it, sir. Example where it can be available publicly, or you have established a process to make these financial statements available to the user. And last mate says, whenever there is any document which contains the summary financial statement, it will also have the audit report and indicate that auditor has reported on them. Easy peasy, easy, sir. There is one more point which is given here. Just understand it. Sir, the law regulation can say that you don't need to provide the audited financial statement to the intended users. And law regulation is also providing you a criteria for preparing the summary financial statement. Then in that case, as the auditor, you need to describe the law regulation in summary financial statement. So this is one extra thing that you need to understand. So if the law regulation says, no, you don't need to provide the audited financial statement, we are providing you with the criteria for preparing the summary financial statement, just mention this fact. Just mention this fact. That's it. Now, sir, talking about the nature of procedures, one of the favorite questions of ICI, and I think a 5 marker easy peasy question can be asked from this topic. Please understand everyone, very, very easy topic. Sir, what do we need to do as an auditor? What do you need to do as an auditor? These are the 5 points that you know from exam point of view. First thing, you need to evaluate these 5 things. First thing is that you need to evaluate whether the summary financial statements are disclosing. So what do they need to disclose? The summarized nature and identify the audited financial statement. Got it, sir? Even though they are summarized, you need to evaluate that they are disclosing the necessary information. They are disclosing the necessary information and there is an appropriate aggregation or summing of all the information. Got it, sir? So that they are not misleading. So that they are not misleading. So first of all, they are summary, but still they have the necessary information so that they are not misleading. Got it? Got it, sir. In the third point, disclosure returns. Disclosure returns, yani again, you need to make sure that they disclose the applied criteria, whatever is the criteria applied, and then make sure that this applied criteria, if it is acceptable, they are using it. That means the summary financial statements are prepared as per the applied criteria. Got it, sir? And last point is very easy. You can remember the last point without any undue difficulty. Yeah, you got the point right. So the audited financial statements are available to the intended users without undue difficulty. So this is the last thing that you need to check as an auditor. So these are the 5 points. Let's revise it quickly. First thing, disclose the summarized nature of the financial statement. Being a summary, still it should disclose all the necessary information and aggregation so that it is not misleading. Third point, disclosure returns. Now what you need to disclose, sir? We need to disclose the applied criteria. If it is acceptable, then make sure summary financial statements are prepared as per it. Point number 4, done. And fifth point is something we can remember without undue difficulty. That means the audited financial statement from which summary is prepared, these are available to the users without undue difficulty. Let's revise it quickly from the book. Please focus here. What was the first point? Sir, they adequately disclose the summarized nature and identify audited financial statements. Even though they are summarized, they should have the necessary information, appropriate aggregation, not misleading. Third point, disclosure returns. What? Applied criteria. Now prepare it as per applied criteria. Last, may audited financial statement available to the users without undue difficulty, unless the law regulation says, no, not needed, criteria we are giving. Then in that case, that should be disclosed. Sir, if the summary financial statements are not accompanied by audited financial statement, is a continuation point. Make sure they describe clearly from whom or where the audited financial statements are available. If the law regulation says it is not to be available, make sure you state the law regulation. Got it, sir? Then what you need to do, sir, summary financial statements and audited financial statements need to be compared to see whether summary financial statements agree with or recalculated from the audited financial statement. So these last 2 points you can just give a read. That's all that you need to do. Now everyone, we are in the end game. Now we are at the last part of this standard, which talks about forming an opinion. Please take 2 sips of water. All set? Yes, sir. We are all set. Now talking about the forming of opinion, if you are going to give an unmodified opinion, there are 2 options available. And I must say this concept is very similar to SA 700. In SA 700, whenever I used to talk about unmodified opinion, what were the 2 options available? First one, that the financial statements are prepared in all material respects as per the applicable FRF. Another option, that the financial statements give a true and fair view of the state of affairs and P&L of the entity. So if you are following a fair presentation framework, you used to say they give a true and fair view. If you are using a compliance framework, you used to say they are prepared in all material respects as per the applicable FRF. So the same way they have also given us 2 options. First option, that the summary financial statements are consistent in all material respects with the audited financial statements as per applied criteria. So instead of using applicable FRF, they are just using applied criteria. Or they are a fair summary. It means a fair presentation framework. Fair summary of the audited financial statement as per applied criteria. Sir, both points are similar? Yes. This point, same. This is the only difference. That means consistent in all material respects, fair summary of the audited financial statement, of the audited financial statements as per applied criteria, as per applied criteria. Got it or not? Yes, sir. If the law regulation says no, no, you have to use a different wording, then in that case you need to apply the procedures that we discussed above. Which procedures? These procedures. Got it, sir. And further procedures if it is required. Got it, sir. Then evaluate, can it create some misunderstanding? And if the answer is yes, it can, then you need to add some further explanation so that you can mitigate the misunderstanding. But sir, if we can't mitigate the misunderstanding, then in that case you should not accept the engagement unless required by law regulation. So this is the same thing which is given here. You can just take a read. Now talking about the audit report on summary financial statement, very easy, just read with me. First of all, it will have the title indicating it is an independent audit report. Simple. Then it talks about the addressee. Addressee is generally members of the company. It says if the addressee is not same as the audit report, then see who can be a different addressee. That will depend on the terms of engagement. It can be the board of director. It depends on the nature of the entity. If it is a partnership firm, it can be the partners. Then the purpose. If it is a special purpose framework, then sir, we discussed about three users: CRC, ter, creditor, regulator, contractor. I hope you have revised SA 800. If not, please go and revise it also after this session. Okay. So based on the terms of engagement, nature of the entity and purpose, there can be different addresses. Simple, sir. Then identify the summary financial statement. That is the title of each statement: balance sheet, P&L, cash flows, summary. Okay, sir. Then it says, if the auditor is aware that summary financial statements will be included in a document that contains other information. Which is the document of other information? Sir, it is the annual report. Then he may consider, if the presentation allowed, that on which page number the summary financial statements are presented. This helps the reader to identify the summary financial statement to which the audit report relates. So in your audit report, you will give the page number on which summary financial statements are presented. Got it? Got it, sir. Then identify the audited financial statement from which you have calculated this summary. Then clearly express your opinion. Got it, sir. Plus, make the users understand that this is a summary, so it does not contain all the disclosure required by applicable FRF. Because it does not contain all the disclosure, it is not a substitute of reading the audited financial statement. You have to read the full financial statement. Got it or not? Yes, sir. Then it says about the subsequent events. Don't worry, I will make you go through this point after 5 minutes. Okay, sir. Then it says you need to refer the audit report on audited financial statement, date of that report, unmodified opinion on the audited financial statement. Sir, what if it is not an unmodified opinion in the audited financial statement? Don't worry. We will discuss this part also in the coming 2-3 minutes. Got it, sir. Then you talk about management responsibility, audit responsibility. Management responsibility, prepare the financial statement. Audit responsibility, give the opinion. Then you need to sign with the number, firm registration number, membership number, UDIN. Simple. Make sure that you don't date the audit report unless you have 4 things. What are the 4 things? First of all, summary financial statements are prepared. Second thing, management has taken the responsibility. Third thing, audited financial statements are dated. And last thing, you got the sufficient and appropriate audit evidence. Once more, summary financial statements prepared. Management took the responsibility. Third thing, audit report on audited financial statements ready, and you have got sufficient and appropriate audit evidence. Is it logical? Yes, sir. And last, may talk about the place of signature. So I will request all of you, this audit report wala part just read for your safety. Got it or not? Yes, sir. Now we are going to cover the amendment part. Now we are going to focus on the amendment part. Everyone, please focus on the board. Sir, what happened? See, if in the audit report on audited financial statements, there is a qualified opinion. Oh, then do you also need to provide a basis for qualified opinion? Yes, sir. Now, sir, based on these audited financial statement, there is an audit report on summary financial statement. Yes, sir. What will it refer to? So first of all, it will refer to this qualified opinion. Got it. Then it will refer to this basis for qualified opinion. Plus, what is the effect of this on summary financial statement? It will also talk about that. You got the point or not? Yes, sir. Sir, what if it was not a qualified opinion, it was an adverse or disclaimer of opinion? Let's cover that case also. If in the audit report on audited financial statements, there was an adverse or disclaimer of opinion, there must be basis also? Yes, sir. But when is the adverse or disclaimer given? When the impact is material plus pervasive. Then means whole financial statements have a issue? Yes, sir. Do you think it is right to give the opinion on summary? If the financial statements are bad, do you think summary will be appropriate? No, sir. So it is not appropriate to give an opinion on summary financial statement. So again, the same thing, refer to the adverse or disclaimer of opinion, basis for adverse or disclaimer of opinion, and then say, because the whole financial statements are bad, we are not going to give any opinion on summary financial statement. You got the point or not? Yes, sir. Then two more cases. These are amendments. Please focus. If in the audit report on audited financial statements, there is some masala. Masala means SA 570 Murg para, material uncertainty related to going concern. SA 701 Cam para or SA 706 EOM or OM para. Again, you just need to refer these points, refer this matter in which is covered in this para plus its effect on summary financial statement. Easy, sir. Now comes a different point. Please focus. If in the audit report on audited financial statement, ठीक है, there is a other information section. What is the other information section? Basically, we discussed this concept in SA 720. In SA 720, I told you that let's say company issues an annual report. Company issues an annual report. So do I need to audit the annual report? No, sir. I am required to read it. I am required to read the annual report so that in between the financial statements and annual report, there should not be any material inconsistency. Between the financial statements and annual report, there should not be any material inconsistency. If there is a material inconsistency, then I see whether material misstatement in financial statement or material misstatement in annual report. And if there is a material misstatement in annual report, then I add this section. Then I add this section in the audit report that there is a material misstatement in the annual report, or you can say other information. You understood the concept or not? Yes, sir. So if there is a material misstatement in the other information, that is the annual report, again, you will refer this matter in the summary financial statement audit report. Got it, sir. Plus you also need to refer the effect. Sir, effect on summary financial statement? No. Effect again on the document. Document means the annual report which contains the summary financial statement and audit report on summary financial statement. You understood the point or not? Yes, sir. Last time, if you have already audited on the audited financial statement and in your audit report on the audited financial statement, there is a other information section which says there is a material misstatement in the other information, that is the annual report. You need to refer this matter in the summary financial statement audit report. Plus, you need to talk about the effect. Effect on summary financial statement? No, sir. See, everywhere you were talking about a effect on summary financial statement, effect on summary financial statement, but you are not here. You are not talking about the effect on summary financial statement. Here you are talking about the effect on the document. That is the annual report which contains the summary financial statement and the audit report on summary financial statement. Understood the concept? Yes, sir. So now everyone come to your book. This is the same thing which is given here. Now, sir, let's say summary financial statements are not prepared properly. Summary financial statements are not prepared properly. Then in this case, which opinion to give? Qualified? No. Disclaimer? No. You clearly need to give just an adverse opinion. So it says if the summary financial statements are not consistent in all material respects or they are not a fair summary, clearly you will give an adverse opinion. Got it? Got it, sir. Now let's do some questions. So see, first of all, you can see question number 2. Question number 2 talks about the factors affecting the auditor's determination of acceptability of applied criteria. So direct question, you just need to mention SA 810. Then you see that the applied criteria means the criteria applied by the management in preparing the summary financial statement. What were the factors? Basic factor, nature of the entity, purpose of summary financial statement. Purpose is to satisfy the users, information needs of the users. And remember, alert that it should not be misleading. Make sure these are not misleading in the circumstances. Then, sir, you can come to question number 6. Good question. MTP May 24. Please focus here. It says that the audit report on audited financial statements contains a qualified opinion. So on the main financial statements, there is a qualified opinion. Okay, sir. And auditor is satisfied that summary financial statements are a fair summary. So what are the other matters in the audit report that he has to mention in addition to the other elements of audit report? So you just need to mention 3 things. What, sir? qualified opinion, basis for qualified opinion, and the effect of that qualified opinion on summary financial statement. Easy, sir. Now comes the second part of the question. If you feel summary financial statement not a fair summary, and management is also not ready to make the necessary changes, which opinion you give? Clearly just give a adverse opinion. Clearly in this case you just need to give a adverse opinion. No disclaimer, no qualified, clearly give a adverse opinion. Easy peasy, easy, sir. Is there one more question that I want to do with you? Yes, sir, I can give. Question number 4 of your study material. Why is the auditor of a company there is an adverse opinion on the main audited financial statement? What are the additional points to be mentioned in his report? So the first thing, adverse opinion. Second thing, basis for adverse opinion. And the third thing, effect of adverse opinion. No. Not the effect here. Here we need to say it is inappropriate. Say with me, inappropriate to express the opinion on summary financial statement. Got the point or not? Yes, sir. We got it, sir. We are amazing, sir. Now, sir, we both understand that if the financial statements are prepared as per special purpose framework, got it? Yes, sir. Two things are restricted. What are the two things restricted? First of all, the distribution or use. And the second thing is that it is restricted to the users and it is restricted for distribution. So you need to alert the users that is prepared as per special purpose framework, because it is prepared as per special purpose framework, not for every user, not for every person. Okay. So similar restriction will be there in the audit report on summary financial statement. Now talking about the comparatives. Sir, what is the comparative? So if the figure is given of 31st March 24, the comparative will be 31st March 2023. Got it, sir? So it's a very simple thing given here. Please read with me. So if it says if the audited financial statements contain the comparative, but summary financial statements don't, then see whether this omission of not including the comparative, is it reasonable? Is it reasonable? And if you feel no, it is unreasonable, then you need to determine the effect. Got it, sir? It says if the summary financial statement contain the comparatives which were reported on by another auditor. That means this year you are the auditor, but this year here was a different auditor. Who is this different auditor? We have studied this concept. We call him predecessor auditor. We call him predecessor auditor. So as per SA 710, you are required to add a OM para, other matter para. And three things we have discussed in 710, you tell that they were audited by predecessor auditor. What was the opinion given by him and what was his date of report? So predecessor auditor, opinion and date of report. Three things need to be given. So same thing of SA 710. So once you are done with the revision of 710, this point is easily something that you can relate with. Now talking about the unaudited supplementary information. So supplementary information is a extra information which is given with the financial statement. Again, this concept we have covered with 700 SA. So it's same. So in SA 700, I told you that whatever is the extra information, it can be of two types. One which is integral, one which is not integral to the financial statement. Something which is integral will be covered by the auditor's opinion. Something which is not integral will not be covered by the auditor's opinion. So if it is not integral, that means it is unaudited. It should be differentiated. It should be clearly differentiated from the summary financial statement. If it is not differentiated, who to go to? Management. So we will ask the management to change the presentation. If the management says no, then in the audit report just mention that this information is not covered by our report. We have not audited it. Simple, sir. Now talking about the other information. This is related to your SA 720. Sir, this is amazing. Here we study SA 700 series. Same things we are going to cover here also. So auditor will read the other information included in the document which has the summary financial statement and audit report. Basically, you need to read the annual report to see whether there is any material inconsistency between what? Other information and summary financial statement. If you feel there is a material inconsistency, then in that case, discuss with the management. Discuss with the management that whether the summary financial statement or the document which contains the summary financial statement that needs to be revised. If you feel that the other information, that is the annual report, it needs a revision, it is improper, and if the management refuses, then you add a section in your audit report that the material misstatement is there in the annual report. So this is the same thing we cover in SA 720, nothing different here. Now talking about the Auditors Association. What does this part say, sir? What does this part says? Everyone, please come to the notes. So everyone, please focus here. So sir, ideally what should happen? I told you whenever there is a document in which summary financial statement is going, audit report on summary financial statement will also be there with it. Okay, sir. But what if In one case, there is a document in which management has added the summary financial statement, but the audit report on summary financial statement is not there. So what should be happening in this case? Just understand one thing. You will request the management to include the audit report. You will request the management to include the audit report in document, and if the management says no, 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 then take appropriate action. Is the case number one clear? Yes, sir. So basically, in any document, summary financial statement and audit report should go together. If summary financial statement is there but audit report not there, you will request the management to include the audit report. If management says no, then you take appropriate action. Now coming to case number 2. Sir, what does the case number 2 says? So the case number 2 says, understand one thing. The auditor has done the audit of financial statements. Okay, sir. But when it comes to summary financial statements, that he has not audited. See, it's simple, na? Auditor has audited the financial statement, but when it comes to summary financial statement, that he has not audited. And there is a document in which there is an audited financial statement, there is a summary financial statement, and there is an audit report on audited financial statement. So, sir, what can happen? See, audited financial statements are audited, that we know. But when with the summary financial statements, there is an audit report on audited financial statement, user can get a feel. User can get a feel that these summary financial statements are also audited. That these summary financial statements are also audited. So if an entity makes a statement in what? In a document which refers to the auditor and a fact that summary financial statements are derived from the financial statements audited by the auditor, then you need to be satisfied. Satisfied about the statement and satisfied about the reference. Satisfied that this reference is made in context of the audit report on audited financial statements. That this reference is made in context of the audit report on audited financial statements. And whatever is the statement that has been made, it does not give a feeling or an impression that the auditor has reported on summary financial statement. Got it, sir? If you feel that this reference is not proper or this statement is not proper, then you can request the management to change the statement, or you can request them to remove the reference. Or management can also ask the auditor to report on summary financial statement. That this report that you did not give, now you can report on the summary financial statement. If either of this is not happening, if management is refusing, then auditor shall state that I don't agree with you, and again he will take an appropriate action. So the game is very simple, that if there is some document in which these three things are there and management has made a statement and a reference to the auditor and a fact that summary financial statements are derived from audited financial statement, just be comfortable, just be satisfied that whatever reference is made, that is made in context of audit report on audited financial statement. Whatever statement is made, it is not giving a feel that auditor has reported on summary financial statement. If the reference is not proper, if the statement is not proper, then you will request the management to change the statement, remove the reference, or you can ask them that I should also do the audit of summary financial statement. If the management says no, then you say that I don't agree with you, and in that case take a appropriate action. So just go in a logical flow the way that I have discussed. Got it? Got it, sir. So this auditor association wala part is done. Now everyone is very happy. Why, sir? Last topic of this essay. Last topic of this essay and everything will be done. This topic talks about timing of the work and events subsequent to the date of audit report on audited financial statements. Please understand this with this diagram. A very simplistic thing. See, what is the date of financial statement? 31st March 24. What is the date of audit report on audited financial statement? 15th June 24. What is the date of audit report on summary financial statement? 15th July. Now tell me, what is the definition of subsequent event? Sir, subsequent event means the events between the date of financial statement and the date of audit report. The date of audit report on the financial statement. Yes or no? Yes, sir. So is it a subsequent event? No, sir. This is not a subsequent event. Whatever is the time gap between the audit report on audited financial statement and the audit report on summary financial statement, this time period is not a subsequent event. This is not a subsequent event. Whether adjusting, non-adjusting, we don't give a damn. This is not a subsequent event. So here, do we need to do any audit procedure and collect any evidence? No, sir. No audit evidence to be collected here. Do we need to report on the effect of events here? No, sir. So say when the audit report on the summary financial statement is dated after the audit report on audited financial statement, then you are not required to do things. What, sir? No need to collect any additional evidence. Okay, sir. Or no need to report on the effect of events subsequent to the date of audit report on audited financial statement. So no audit evidence to be collected here, no reporting to be done here. This same thing that you are not doing now, just mention in your audit report. So in the audit report on summary financial statement, state that summary financial statement and audited financial statement don't reflect the effects of subsequent events after the date of audit report on audited financial statement. So this thing that you are not doing, this you need to mention in your audit report. Got it, sir? Are these two things clear? Yes, sir. Now let's talk about the challenge. Now let's talk about the challenge. What is the challenge? Sir, challenge is this part. Which part? When we studied essay 560, ठीक है sir. In that essay 560, I told you there are two types of subsequent events. Part 1, the event between the date of financial statement till the date of audit report. Part 2, the facts. Facts which become known to the auditor after the date of audit report. That means you have signed the report and then you get to know something which makes you amend the financial statements, which makes you amend the report. And this is the same thing happening here. Auditor may become aware of the facts. Sir, which facts? Facts which existed on the date of audit report on audited financial statements. That means those financial statements from which you have drawn the summary. And auditor wasn't aware. So what will he do? Whenever he gets to know about these facts, he will get the adjustment done in financial statement and issue a new report on the financial statement. So he will consider the facts as per SA 560 and for the audited financial statements. When the audited financial statements are finalized, then you can report on the summary financial statement. So then he can issue the audit report on summary financial statement. So last point is just a little challenging. So the challenging part is he gets to know about the facts which existed on the date of audit report on audited financial statement. And he was not aware. Which date we are talking about? 15th June 2024. So if you get to know about these facts, what will you do? Sir, we will deal on this audited financial statement as per SA 560. Once these are ready, then what we will do? Then we will date our audit report on summary financial statements. So this is the same thing which is given in this part. Got it? Got it, sir. Now let's do two more questions. Now let's do two more questions on essay 810 and everything will be crystal clear to you from exam point of view. First question. CA Madhur. CA Madhur is the auditor of the company which issued the audit report on 15th of June. Oh, audit report on 15th of June. Same case, sir. And then the audit report on summary financial statements was dated 15th July. Okay, sir. So it says whether there is any additional reporting responsibility. Yes, sir. We need to report that whatever events which happened between the date of audit report on audited financial statement and the audit report on summary financial statement, our financial statement don't consider the effect of this. So we have not reflected the effect of events which occurred subsequent to the date of audit report on audited financial statement, whether it is summary or whether it is audited financial statements. Got it, sir. Then consider that the audit report on financial statements which is issued by Madhur, it contains a qualified opinion. Can he give an unmodified opinion on summary financial statement? See what it is saying. If on the whole financial statement there is a qualified opinion, can I give an unmodified opinion on the summary financial statement? Answer is yes. If the summary has been prepared properly, you can give an unmodified opinion. My another question to you. If the whole financial statement contained adverse opinion, if the whole financial statement contained disclaimer of opinion, then can you still give an unmodified opinion on summary financial statement? Answer is no. In that case, I told you it is inappropriate. It is inappropriate to give an opinion on summary financial statement. So if the whole financial statement contained qualified opinion, can I give an unmodified opinion on summary? Yes, sir. So if you feel summary financial statement are consistent in all material respects with the financial statement as per applied criteria, or they are a fair summary as per the applied criteria, you can give an unmodified opinion. Okay, sir. And what are the additional things that you will add because the financial statements contain qualified opinion? We will refer to three things. You will refer to the qualified opinion, the basis for qualified opinion, and the effect on summary financial statement. These are the three additional points which will be included. Got the point? Yes, sir. So with this, your essay 810, full revision of the questions, concepts, amendments for your exams is done. If you like the video, do give it a like. Do let me know in comments how was the video for you. Did you get the comfort or not? And yes, just make sure you are just studying with happiness, because when we study with happiness, then only we progress. And last thought of the day. Thought of the day is, it does not matter how slowly you go. It does not matter how slowly you go as long as you don't stop. So even if you are not studying 18 hours, 17 hours, 16 hours per day, it's fine. Because studying 16 hours one day and not studying the next day, it just makes it 8 hours a day. I hope you understand that point. If one day I'm studying 16 hours and next day I'm not studying at all, it makes it 8 hours a day. Rather than, what is better? Consistently, if you are able to study 11 to 12 hours, consistently, if you are able to study 11 to 12 hours, that is the best. That is the best. That will help you win the race. Because remember, it is not the rabbit that wins the race. It is the tortoise. It is the turtle that wins the race. You got the point or not? Yes, I don't remember whether it was turtle or tortoise, but yes, who was moving slowly, consistently, that person win the race. And I'm sure you will also do. So see you all in the next one. Till then, just make sure you are subscribed to this channel. And yes, keep studying with happiness, because then only we progress. Keep going.